Hi, my name is Yuli, Deputy Portfolio Manager at Blackmore Capital. Joining me today is Chief Investment Officer and co-founder of Blackmore Capital, Marcus Bogdan, to discuss what perspective 2023 can bring and what we can bring to 2024. So Marcus, let's get straight into it. Double-digit total return for the ASX 200. 2023 was not a bad year for equity investors, but when we dive into specific sectors, we would say there were some divergences.
Well, the differences in sectors was striking. And while the overall market, in terms of the accumulation index, rose by 12.4%, there were significant differences in return across sectors. For us and consensus, what was most surprising was the strong performance of technology and discretionary retailers in an environment of rapidly rising interest rates. Now, generally, higher rates compress valuations and moderate spending, whereas the more defensive businesses across the industrials, healthcare and telecommunication sectors were the notable underperformers, and that's primarily where we had the portfolio positions. In that environment of higher interest rates, those stocks associated with essential industries are generally meant to outperform. But for last year, that wasn't the case.
Yes, we had a much benign outcome for the economy. And as we saw how the economy was well supported by strong employment and migration level in Australia, we did pivot to some more cyclical names.
Indeed, we certainly waited until we saw softness in the valuation across those cyclical sectors, and that came in the second half. In the industrial cyclical space, a notable name that we purchased was James Hardie. In the discretionary retail space, we invested in Premier Investments. And then we finally broadened our exposure to technology through the logistics software company WiseTech. And then we made our first investment in lithium after significant price weakness. We took a position in Pilbara Minerals in late 2023.
What about 2024? We are obviously less than a month in. What do you expect to happen and where do you see opportunities?
Well, we expect interest rates to stay higher for longer, continued solid growth, cuts in interest rates, but not at the magnitude that the market is currently pricing in. We're definitely more optimistic in 2024 in what lagged in 2023. So we retain our overweight positions in industrials, healthcare, and telecommunications. Primarily, we see opportunities in good quality names that have lagged the market in 2023. Those qualities that we like are things like balance sheet strength, market leadership, history of management execution, and attractive industry structures that deliver above average return profiles.
And with those opportunities, we have made some recent changes in 2024 and recycled profits from stock names that have performed strongly, such as James Hardie, NAP, and Spark New Zealand.
We added a new stock, IDP Education, which is a leading global student placement and English testing provider that has delivered strong returns for over a decade for investors. And we added to ResMed, which is a global medical device company specialising in sleep apnea and respiratory conditions, which is expected to deliver double-digit earnings per share growth over the next several years.
Let's finish this off on the market valuation right now. The ASX 200 is trading at a slight premium compared to the long-term average. What is your view?
Well, markets have already priced in a steep pivot by central banks to cut interest rates aggressively in 2024. However, we believe that the timing and pace of those cuts will be slower and shallower than what the market currently anticipates. For the Australian market, valuations are not excessive, with the ASX 200 trading on a 12-month forward PE of around 16 times, which is about a 10% premium to its long-term average. We believe that that valuation is justified if the economy continues to grow at the current trajectory, not too much and not too little. So in summary, we believe that our overweight position in high-quality, large-cap stocks will provide the right balance of both opportunity and risk in 2024.